What up, Hyperchange? Welcome to another episode. Today, we have an epic interview lined up with one of the hottest startups in fintech and one of my favorite startups, Public. And we've got the co-CEO, Jannick, on the line. Jannick, what's up? Welcome to Hyperchange.
What's up, man? It's good to finally be here.
Yeah, this interview has probably been like 2 years in the making. We collabed way back when Public was still like in its beta phase, known as Matador, and you were just kind of feeling out the idea. And it's been incredible to watch you grow to rebrand into Public, to really sort of blossom into the vision that you were telling me about years ago, and become this sort of social investing app. You just raised a ton of money. You're getting all these celebrities on board with the app, so it's been really cool. I kind of just wanted to give you a congrats on the success, because I see a lot of startups that I have met with, especially back then, that aren't around anymore. And so to see you actually really execute and come a long way, it's been awesome to just watch.
Yeah, thanks, man. And likewise, like I feel like we met, I feel like it's 3 years ago, maybe, since I know we were at a hotel, so it's definitely way pre-pandemic. And yeah, but obviously your channel has grown a ton too. And so it's been exciting to watch.
Yeah, Crosby Street Hotel, I think I remember it.
Crosby
and like
Street,
Soho, that was epic. Yeah, no, and I remember we did that. That was actually probably like the last sponsored video I did, and I was super picky about sponsored videos. But I was like, honestly, I'll break my rule for not doing it for this Matador app because this seems really cool. And then I remember being super picky and taking some of the payment in stock because I was like, this is so dope. And so I'm actually still, full disclosure, an advisor to Public because I wanted to sort of partner and I feel like that was awesome. But so much love for Public. But for those who don't know and aren't clued in on the app, could you just give us a rundown on, what is Public? Why is this so awesome?
Sure. So Public is the investing social network. And so we've really married the concept of social with investing. You can buy any stock for any amount of money with zero commission. When we launched in September of 19, out of that beta phase, we really rolled out and kind of pioneered, I think, the concept of real-time fractional investing. So basically, you can buy any stock for any amount of money. So even if you just have $100 to get started, you can still buy up to 100 different companies and invest sort of how you like, control your own diversification, etc. But I think more importantly, we've always wanted to build a kind of community vibe around the stock market that's, I think, very different than what you've seen from other communities around the internet that have sprung up around the stock market and stock trading historically, where it's a little bit more longer term focused. You're kind of more focused on owning and compounding over time versus making kind of a quick gamble. And so much like yourself, and frankly, like that's why I think when we met back in the day, it was like a meeting of the minds, because you told me I'm going to hold Tesla until until forever, right? And I was a little bit like, yeah, that's obviously how we think some of the best people in the world historically have invested, and so that's kind of the type of investing strategy that we're designing for the most. At the end of the day, Public is for everyone. That's kind of in the name. But we focused much more on just building a social layer where people can they can post out their trades. So whenever you make an investment, you can basically tell folks why in a caption. You can post that out. That turns into dialogue and threads, and people give you feedback, and you have discussions with people. You can follow other investors. So obviously, such as yourself, that are kind of expert in specific industries or themes or companies even. And I think it's just good to be able to get a fairly diversified view from many different kind of investors, get different takes from people around various aspects of investing strategies overall, as well as the stock market. So that's kind of what we built. Everybody kind of has their Public portfolio. If you go to public.com/Jannick right now, you can see mine. And so really just trying to make it a little bit more open and transparent to showcase what people are investing in and why.
One thing you had mentioned is this sort of longer term, really investing focus that Public has. And that's one thing that I love about it. Like even within the app, it doesn't say buy, it says like invest. So you're really trying to create this sort of approachable easy to use, fun community. And I love that like focus and sort of brand ethos that you carry through everything. Like if it's a really small cap stock, you'll say, hey, this is a really small, risky micro cap stock. Like, are you sure you want to invest in it? You even have a section within the app where I can move some of my stocks into like a long-term portfolio. So it really segments in my mind, like this is a long-term investment. I'm not going to touch this. Like, I love how you're kind of guiding people towards investing in the right way. And like one story that I don't even think I told you this is my little sister just graduated law school. Shout out to Reezy. And so I said, as your present, you're not in the stock market. You don't have any savings. You're gonna open up a public account, and I'm gonna Venmo you $200, and you're gonna put it in, and you're not gonna take it out, and I'm gonna teach you how to invest. And then like 2 weeks later, she's texting me like, guess what? I'm on Etsy's earnings call. Like I found out through Public, and I'm like, what? Like, and now she's putting more money in, and like it's over $1,000 because it grew, and she put more money in, and like she started snowballing for retirement and has been learning, and the app has made it so accessible. And so I don't know, that really convinced me to become a believer in the product. So I'm curious, like, how did you get that inkling, and where does that come from, that brand ethos of like approachable, educational, and think long term? Like it feels like you're really like the good guy broker, you know?
Yeah. I mean, first of all, that makes me so happy to hear stories like that, of course, because it's basically why we built the company. I think we realized pretty early on that a lot of people were just intimidated by the stock market, and it came down to a couple of different factors. But I think you can overall just attribute it to like psychological fear factor of maybe having misunderstood the stock market a little bit. Again, I think if you look at the communities that have sprung up around it, it's been, very much kind of a little aggressive, short-term focused, typically white male dominated as well, Wolf of Wall Street themes, things like that. And that stuff can be fun for some folks, but for others, it can be a little bit intimidating and not necessarily present the most inviting kind of culture. And so we did a lot of hard work early on to just really make sure that Public is a place where everybody feels welcome, regardless of their background and how much investing experience they have. And we actually differentiate a lot between the terms of accessibility versus approachability. And they're kind of two very, very similar sounding
Yeah, break
words.
that down for us.
Well, so accessibility is really just giving people access to stuff, right? And but not necessarily having sort of any guidelines, any safeguards kind of around it. And so you can have access to something without necessarily feel like you're being onboarded into it. Whereas approachability from a design perspective is really more making sure that when people come into the Public community, they feel like this is for me. And anecdotally, that's the biggest piece of feedback that we hear every day is you can have people from very, very different backgrounds still come into the Public community and feel like, okay, I see myself represented here. This is for me. I see experts, but also see just other people that are at the same stage of their sort of financial journey as I am. And that is really what makes it approachable, right? Because then it's something where we often make this anecdote that like, you don't necessarily want to go to the gym with a bunch of people that are just way more ripped than you are, right? You kind of want to go
Love that.
with folks that are like at the same level. And a personal trainer is nice, but not everybody can afford that, and that's the same that you will probably find with financial advisors in our industry. And so we found that it just really helps as far as getting people to engage. And I think that's historically where the largest drop off has been, because education around finance has not necessarily been fun. And when it's not fun, it's something that most people just drop off and churn out of kind of doing. And so we try to just take a very different approach in terms of how we can have people engage and be educated around the stock market at the same time.
And I love the one thing that you do about that is the themes. Like you have, like my little sister was actually showing me this last night on the Public app. I was getting ready for this and she's like, yeah, look at this. And like all the themes that she loves. It's like, you know, women founder companies, like let me check out this list and start doing some DD. And it's you've made the investment research process fun. It's colorful. There's emojis. Like I love how you've kind of made it accessible. And the other big thing about that is the social component with celebrities. Like for some reason for me, like I think Shaq joined the app and you even on your tweeting, you're like, look at this celeb, look at their portfolio. Like it's one thing to see a celeb's endorsement with a tweet, but it's another thing to know what stocks they actually own. Like this is a different level of like I don't know. And so in some ways, I think there's a lot of powerful social network aspects to the business because of that. But even beyond that, just as like a, you know, someone in pop culture, it's like, what stocks is Shaq buying? Like that makes it fun and accessible. And maybe I think of him as like someone I can relate to because he's a fun celebrity, but he's not an expert. So it doesn't seem that, but I don't know. And to be honest, I was kind of skeptical when you first told me about this, like people sharing their trades, their ideas, like we're going to get celebs to join. We're going to make this a social network. I'm like, do people really need this feature? Like, is this actually a thing? But it's incredible to see how you've actually really evolved around conversations. Like when I post on the app, I'll make a post. I get a ton of different engagement. Like I think I have over 100,000 followers on Public too. Like I've really seen it blossom and really thoughtful discussion. And there's almost a thoughtfulness of, okay, whenever I trade, I can make a post to my feed, right? Or I can just post to my feed. Yeah. But there's a real powerful and thoughtfulness because I know it's like a financial app. I know people are going to read this. I know it's tied to my money. Like there's almost a lot more of a careful thoughtfulness when I post on Public that fosters really great conversation. So I'm kind of curious about if you could tell us a little more about that social kind of conversational content aspect of the app, because that's the part that I really enjoyed the most.
Yeah, of course. I mean, there's a couple of different aspects to it, but I think most importantly is, and this is frankly why building Public has been outside of everything else that has gone on, and a lot of stuff has been going on in the short 18 months that we've been live. It's been a fascinating social experiment as far as building what may actually at this point be the most verified social network in the history of social networks. And what I mean by that is normally when you join a social network, right? The data that you type in to join is really typically email, password, maybe a username, whatever, some profile picture. On Public, because it's sort of a full stack integration with a brokerage. I mean, we are fully regulated broker dealer nationwide. You have to we have to verify your identity in order for you to become a customer of the brokerage, which means that in theory, you know, anyone who's participating in any conversation in Public, or not in theory, in practice as well, are fully identity verified. And that just lifts the bar dramatically in terms of people's behavior. And I think it just transforms how people act on the app. And I think that more than anything is why the quality of conversation, I think is incredibly high. We really have not had issues with trolling or things of that nature. Because I think, you know, when everybody's there for a legitimate reason and, you know, there are no bots or anything like that because everybody had their identity verified, there's just this like consensus that, you know, you're here to learn, and everybody takes it. It's like, it's fun, but at the same time, everybody takes it way more seriously because everybody knows that like these are real people making real investments. And so it helps navigate that balance a lot, and I think that really more than anything probably has been you know, maybe quote unquote the secret sauce that has helped shape the community into what it is today. On the celeb note, I mean, it's been actually super fascinating to watch because I think what resonates with a lot of people is a lot of people that, you know, are, you know, celebrities, so to say, they've come into some wealth, and they've typically had people that have been able to help them out with that. And in doing so, they've just learned a lot along the way. So, you know, example, when Tony Hawk joined the app, we spoke a lot with Tony, obviously up to that, who's really just a phenomenal guy, first and foremost overall, but to hear the lessons outside of skateboarding that he's learned, the companies that he's invested in, I'm not sure I can disclose them, but like there were so many fascinating anecdotes, like investing in startups that are now household names and whatnot, and like the people in circles in the valley that kind of drew him into and whatnot. And it was, you realize that most people who are in a position like that, like he may have just started out as a legendary skateboarder, but over time, when you are in that position, you learn. And so I think he saw this as an opportunity to kind of pass on those learnings to specifically to folks who do not have the luxury of being able to surround themselves with financial advisors and things of that nature. And I think a lot of people take a lot of pleasure and pride in that, and that's been awesome to see. And I think that's specifically why, like that's sort of what's resonated with a lot of these more celebrity kind of profiles that we've been able to welcome into the community.
Yeah, it's interesting to see how celebrities are going from like cultural influencers to like financial and business influencers. Like how many celebs are starting VC funds and, investing in all these startups. Like I know there's a few that are invested in your startup as well. And yeah, it's just really cool to see those worlds kind of overlapping. I think it's all good and it's all part of this normalizing finance process.
100%. I actually think there's a correlation between that and the amount of truly mission-driven impact companies that you've seen come out, right? So like, whether it's us or like Calm or like all of these companies, like you've seen the rise of, like, to your point, celebrities like building out their portfolios and becoming more business sort of savvy and making moves in that world. Whereas like 10, 20 years ago, that would be a complete anomaly, right? And now it's becoming a little bit the norm, but like, you've also in that time frame seen just so many more kind of high, net good impact things that you can sort of invest in, right? And there's a lot of problems to be solved. Like Robert Downey Jr. just launched a venture fund that predominantly is going to invest in, I think, green tech and clean energy and things of that nature. And so it's something that aligns very well with their personal brands as well, which I think is why it's one of the factors, at least, that have helped us sort of help support that rise in celebrity investments.
Awesome. And switching it up a little bit to the industry as a whole, and this is what I'm super fascinated by, is all this drama that's happened with, honestly, a coming of age moment where I feel like, Robinhood and Public were sort of these like things that were just kind of bubbling up. And then all of a sudden it's like, you are the it brokers. Like E-Trade looks like the little guy, and this tidal wave shift has happened. Everyone's going for free trading. So I kind of wanted to start with that of like, what's your take on this tidal wave of commission-free trading? Because we've seen almost it's been so interesting to watch of that Robinhood started it. And then a couple people, Public was early on this, and then everyone started copying it. And so now commission-free trading has become the norm, but we're all slowly learning that, like, if you're not, are you the product? That's what I've said about Robinhood a lot of times. Like, if you're not paying for it, are you the customer or are you the product? Because they're selling your order flow. So, what's your thought on this idea that we're not paying to trade and kind of how this industry just kind of shifted that way?
Yeah, it's a great question, obviously. So I think what happened is that, and we recently, obviously, we actually opted out of payment for order flow as a revenue model. And so now Public is sending all orders directly to exchanges, and we substituted that revenue model with a tipping system on trades, which is completely optional for the user. And the reason we did that is, I think there was obviously the move to zero commission, right? And obviously, Robinhood started that, and nobody will ever be able to take that away from them. I think a bunch of folks kind of did a fast follow, or maybe not that fast, but a lot of people followed in the end. And nobody, I think, during that stopped to really consider what you're kind of giving up. And it became more and more apparent that, payment for order flow is the way that zero commission trading is, like, the reason it can exist, right? And I think now that's sort of generally known. And it was it was a very obscure thing. I think you had a video on this like 2-3 years ago.
Yeah, I actually wanted to mention that because that was even some more context of this is like it was right around the time we were meeting is I made a whole video of like why I'm not on Robinhood. The
Yeah.
payment for order flow is sketchy, but I'm like, okay, maybe that's a wash. But they had already gotten in trouble for selling it to Citadel and getting fined by the SEC for not doing it fairly. So I'm like, okay, not only is the paying for order flow sketchy, but Robinhood's on the record as kind of, at least the SEC, they had to pay them. And it happened again in a much bigger settlement. So they were kind of, that's what really rubbed me the wrong way. And we were talking originally, and I was like, dude, you cannot sell order flow. Like, you're going to really have to think about your monetization model. Like, this was in our early meetings. And you were like, bro, how do we, it's like, I know you guys are trying your best. I think that's what people don't realize is there's a lot behind the scenes that make it very difficult to kind of pull off and execute this. And if you're going to offer that commission-free, zero friction trading, you have to make money on it somehow. Nothing can be free. But so it's been so cool for me to watch how it took you a year and a half to get there and like was really difficult. But that is potentially one of the biggest, boldest moves I've seen you make is turn down capital and say, no, we're going to do the right thing. We're going to stop payment for order flow. This is the right way to build it. Like, I've just been incredibly impressed with that statement and sort of the way you've learned that. So
Yeah, thanks. I mean, I think it's been very well received. And I think, as one of the few that we were thinking about this for a very long time, I actually talked about it 2 years ago, right? And it took us a while to also just, it was truly the thing is like, we thought about tipping for a long time as like a potential kind of revenue model. We liked the idea that it put the user in charge and the user could decide, and we directly tied our economic performance to how we're doing truly as a company and how we're serving our customers and also just like the goodwill of the community. And then what you had happen, obviously, since January 28, immediately thereafter, I think we realized two things. Number one, that this was definitely the right move, and like that tipping could actually substitute payment for order flow as a revenue model for us. And then number two, that the time to do this was right now, because I think, back 2 years ago when we chatted about it, a lot of people didn't really know what it was. And I think now it's sort of had a moment and everybody has become much more aware. And so we really just said, okay, we're going to hold off on a bunch of different things. And like, we were trying to scale the systems as many were time, because we were seeing a massive influx of new users, but we still wanted to prioritize actually getting this done, because we do think that there has been this potential kind of conflict of interest of like, people don't really understand, like, why are my orders not going to exchange? Like, when you come into the stock market for the first time, you would kind of expect your orders to go to an exchange, and then they're being routed to different market makers who then pay people for it and whatnot. And so there's just a lot there that we feel like it's better to just tell people, hey, we're going to route to exchange. We're going to be completely transparent about how this actually works. And then we're going to allow folks to leave a tip on trades. And if you think about it, it's a little bit like an optional commission, like not really, because you don't have to do it. But I guess we're also coming from the sense of like, where do you go after zero commission? And that prompted the next question of like, is zero commission necessarily sort of the best thing in the whole world? Like, at what cost does it come at, right? More specifically, because like we always were looking at the industry as like, okay, there's zero commission. How much has zero commission really democratized access to the market versus things like fractional investing, which we were sort of the pioneers of, right? And then a bunch of people kind of followed us with that later. And we were always of the opinion that the reason people who haven't invested before hadn't done so had less to do with fees and commissions and more to do with either not being able to afford a single share of Amazon or Google, or two, being scared of the markets and just generally not having enough financial literacy to feel like that they could do this. And so those were really the two things that we as Public always focused on solving. And the zero commission model was just like built into all of that. And so now we made that decision to opt out of PFOF. It's been incredibly well received by the members in our community, which we're obviously super happy about, and I think gives us a good early strong signal that we made the right decision there.
And so what do you think the kind of fallout will be from the financial markets here? Because, if there is no one to place the blame on for the halting of these stocks, like it's just the system that's broken. I think a lot of it comes down to the settlement process, the fact that these aren't digitally traded things. One thing that I've been thinking a lot about is short selling, the way that that's not disclosed the same way as long positions are. The fact that some brokerages allow naked short selling where you don't even have the stock and you're selling it, which can create where there's more shares short than even exist. So I've been thinking a lot about, what is the market infrastructure take away from this moment, and how can we improve as a market where all participants, don't have to go through this again?
Yeah, I mean, I could see that there would be an array of kind of consequences from this moment, and I kind of divide them up into a couple of different things. So you had a couple of things happen that truly were unprecedented, I think, and that are more novel, right? And I think specifically with regards to the high amount of concentration into individual stocks, and I think that maybe will take a little bit longer time to digest. But actually, then on the payment for order flow thing, that's not really novel. Like there's a new spotlight on it right now because it brings things into question. But like you did a video about this 3 years ago, right? And I think the bigger problem there that we felt at least is where you really start to make money on payment for order flow is when you have things like options trading and margin trading. And so those are things that public don't offer because they don't really fit currently within the ethos of like having people be longer term investors necessarily.
I love that.
And so if you're really banking on PFOF as your main source of revenue, then you are truly incentivized to build these higher risk, kind of more day trader type tools. And that was not what public ever was really about, right? To your point, we built instead things like fractional investing, the long-term portfolio feature, et cetera.
And this is, to me, the part that, incentives are the only thing that matters. So if your business model is saying you're going to generate more revenue from users when they do options, your incentive is to push them to options. And the flip side, or margin, the flip side of that is if you're offering a SaaS margin component and say, okay, $10 a month, $20 a month for access to margin, that's a psychological thing of like, well, I'm paying for it, I might as well use it. So then you're also incentivizing users to use margin, which I would say is to the benefit of your business model. So there's lots of skewed incentives. And so I think, and that's almost the question I have for all of these brokerages. It feels like the Facebook model of, dude, we got 1 billion users, we're not making any money, who cares? It's going to still be worth everything. That's still the mentality that so many startups have, that all these brokerages have, is like, we don't really have a revenue model, but we have all these users. So I feel like eventually there has to be some moment where you kind of crack the code on incentive alignment and engagement on the public platform. So I'm kind of curious if you have anything you could tell us or like features that are coming up, or how you think about that kind of incentive alignment.
Yeah. Just before we go there, let me double click on the other stuff, because I think what's kind of fascinating, and I started looking a little bit at this, is, I think what was called the Dutch East India Trading Company was the first company to ever go public around 400 years ago. And what happened there is the simple, beautifully simple transaction of they wanted to raise capital for private investors that wanted an upside in that company. And the money that were invested there went straight to fuel, their mission onwards in the world, right? And then that is really, I think, the main intent that the stock market was designed for. That's at least my personal take on it, that I can invest in companies, that money helps support the company. Ultimately, if you follow the trail, that leads to job creation for that company, et cetera, and you're supporting that company on this journey. In exchange, you're taking part of the upside, you're becoming a shareholder in that company.
Like literally investing. It feels like we forgot what that was. Like
Exactly, right? And then somewhere in the last 400 years, it turned into all these derivatives on top of where the company is now the underlying asset, and options trading is just one form of that, but there's kind of many others. There's a bunch of institutional players, and up until a couple of years ago, less than 10% of the volume in the US market was retail volume. Now it's kind of grown for 20, some people are now saying 30% as of this moment right now. So obviously that's changing. And I think that change is really what we're very focused on with Public. Of like, we're more focused like, can we bring it back to something that is more similar to the original purpose that the stock market was designed for, of like just giving retail investors access and giving them sort of an approachable way to invest and become owners in the companies that they care about the most and that they think are going to do well in the future, because we think that exchange is one of the most sort of beautiful concepts that have been invented in the history of mankind. And so therefore we haven't really focused on, other derivatives and things of that nature. And it's also like from that lens, it made more sense for us to just like route orders to the exchanges. We feel like it's the cleaner thing to do, for like a better wording. And then people, it'll be up to the people how much they want to tip. They don't have to tip anything, but we're seeing that a bunch of people are, because nobody really said like, I absolutely have to. And I think what we're seeing right now is a lot of the way people have embraced this kind of tipping feature is like a lot of people, they don't need like they're happy to tip, right? Like it's sort of commissions went from 10.7 to like 0. But like, I think, if you tip half a cent or $1 or 10 cents, right? Like that's probably not gonna break the bank for you, especially in events where you're closing out a position potentially and you made some money, right? And so I feel like that's, for us, was just like a cleaner way to do it that more resembles the original intent the stock market was designed for in the first place.
And this is bringing me back to when we were meeting in those earlier days, IEX, which is the exchange that was written about in Flash Boys, which really covered this. And I remember us talking about like, could you partner with IEX? Is that something? Because we use IEX as our API for like hypercharts, for instance, and their whole thing is to build an exchange without these high frequency trading, the kind of different direct exchange model. I'm curious, like, could you give us a little more clarity on what that means when you say route to an exchange? Does that mean you're partnering with someone like IEX and sending them the orders without getting paid for them, essentially?
Yeah, I mean, not IEX specifically, but like there's a bunch of exchanges in the US, obviously NASDAQ, NYSE, BATS, etc. And so we're just routing to those rather than routing to market makers who try to make a market in these securities and pay a higher rebate to fill that trade. And so, but I think that there's a lot of interesting things happening. IEX is one player. There are others as well. And we've talked to a bunch of them, and I think there's a lot more innovation to come, like downstream, sort of from the user just entering the trade. And I think, at Public we'll definitely, I think, be making some more moves there to try and partner with some of these companies, because there is a lot of actually money being invested in sort of any innovation around the sort of downstream execution of trades.
Yeah, totally. And actually, one thing you were saying about the future of investing in companies got me thinking on this crazy moonshot where I actually just invested in Carta on their first transaction on Carta X. Led a deal for HyperGuap. We deployed over 10 million into Carta, and I've honestly been scheming for like a year that Carta and Public, if they merged, and you will have all the users, Carta has all the private companies, the legislation changes for accredited investors, all of a sudden you become the long-term investing platform. You have the customers, they have the companies, bam, you team up, software eats finance. This is the way that totally changes financial markets, multi-$100 billion company. I feel like that's like a moonshot that I can't get out of my head, but I'm maybe too far and you can't comment on that, but I'm curious, like, what's next for Public? I don't know. Can you get us hyped on what you're building? I know you're always scheming on like the next feature. Maybe you can and can't tell us too much, but I'm curious kind of what gets you hyped about the roadmap and future for Public.
I mean, I think your moonshots are always awesome, and although they're called moonshots, you make them seem much less crazy than than what the term moonshot maybe make them out to be. What's next for us? So, I mean, right now we've been just incredibly focused on scalability and growth, but I think we've in a way, the thesis that we've been operating with has also just proven itself. And we've been operating this thesis, as you know, for a couple of years, and like it's just proven itself at a much, much grander scale, right? Like literally building the social network for the stock market has been our thing for years. And here you had this unprecedented sort of intersection of social and investing that caused all these ripple effects. And we've also spent some time trying to just like look at that. I mean, when you're in it, like we were scaling, very, very aggressively during those days, but now having had some time to like look at it and try to crystallize it a little bit, we realized that we actually just have to continue on the path that we set out for ourselves, because a lot of the trends that we thought and hope would play out are kind of playing out, right? Like specifically, retail participation in the markets is growing. I think the role of the retail trader and the retail investor will become much more important over time. Like I don't see that going back. I think retail investors will grow in importance going forward. And we always say that like, there is no reason that any individual, or at least the vast majority of individuals over 18 in this country, shouldn't have an investing app on their home screen. And so with that, there's just a long kind of journey ahead of us, and there are so many things that we want to get into. And I can't talk too much about specific features, but I will say you'll see the content creation within the community evolve a lot. One of the things we launched very recently is a feature called Chart Compare, and so it basically lets you put together a comparison in 3 to 5 taps on your phone of up to 4 different companies and how they've evolved on a given time frame. And that's something that's been super popular in the community because it helps people, again, really just like normally to create that kind of analysis. I mean, you've either had to get access to some kind of financial software, or you had to get real creative in Photoshop or stuff, right? And now with the Chart Compare, you can literally just like, you enter 4 tickers, you pick a time frame, and we just render a beautiful chart that shows you how that evolves. And just like simple things like that are incredibly powerful, because then you add your commentary on top of that, and we're seeing the community really take those kind of things to heart, because it just helps get into the flow of information, of just understanding also, historically how things have moved and so forth. And so we'll invest a lot more in empowering, especially the creators on the app, with the tools to produce content that helps them break down the financial markets in a way that feels more authentic to them.
Yeah, there's no better way to get educated in the stock market than learn. Like that's what I did when I was 14. Just put all my money in this account. Was like, I'm probably going to lose it, but guess what? Next, 15 years later, I got a YouTube channel. Like it's like you never know.
Investing in the stock market is a forcing function for learning. That's the thing. You'll
love that. So true.
You'll have a hard time really educating yourself if you're just like buy a bunch of books and say, okay, now I'm going to read these 5 books with no skin in the game. Like very few people are able to kind of operate like that. And so for most people, being able to just start, it's a little bit like entrepreneurship, right? Like what's the number one advice that someone like a Gary Vee always gives? It's just like start, right? That's step 1. Great. And then you kind of learn from there, right? And I think that's for us where the combination of, first of all, the fractional model, which means you can start with $10, right? And so you don't have to risk a whole lot, but just the act of becoming an investor in the first place is so incredibly important. And then from there, it kicks off a journey where you just learn more and more and more.
And to me, it's so funny because people think about the stock market as this thing they can't access, or like, this thing that exists in this world that is the financial markets or Wall Street that isn't tied to the real world. And it's like, no, like this is like, if you're an anthropologist, you're going to be amazing at stocks. Like I always say, like if aliens came down, or I went to an alien civilization and I wanted to understand their civilization, the first thing I would do is look at their stock market. Which companies are valued the highest? What's their financials looking like? How fast are they growing? Why is the PE of this, UFO company higher than the PE of that UFO company? All of a sudden I'm getting incredible insight into that world. So I think it's like, if everyone's watching that.
On earth did Josh Whedon miss that in Avengers? Like that's so obvious. That should have totally been the thing.
Honestly. And it's like, everyone's watching Netflix and I'm like, dude, Tesla and Elon Musk has been the best show on TV for 2 years, and you could have like made money on it and like help be a part of the change of the world. Like this is amazing. So I think it's just, time is on your side to get people into it. And the other thing, if I'm like, dude, if we could team up to change one perception of the world, and this is even going to NYU Stern, nobody understands this, the difference between price and market cap. And I think a lot of us take it for granted who are in finance. This is something that 99% of people do not understand. And it just is the biggest roadblock to understanding finance. And I don't know how to teach it to people, but like price is different than market cap. You can ask most of your, even parents, even doctors, even people, lawyers, like people who are super, like nobody knows. And so I've been on one on this, like, how do we convince people that price is not market cap? I almost think you should just quote everything in market cap.
Okay,
You know,
dude,
and
so
it,
I was
like,
not going to do this, but I have to do a small drop then because you basically forced me to it. So one of the things we're going to launch soon is, because I 100% agree. And let me start a little bit of a different place. So I think the most important thing historically when we look back at this, that the innovation around fractional investing will really have produced, is exactly what you're talking about. But fractional investing is still relatively new. Like, let's not forget, like we basically pioneered it 18 months ago or something like that, right? And so it's really, but like when you're investing fractionally, you're entering dollar amounts. When you're entering dollar amounts, you don't pay as much attention to what the stock price is and the price per share. It becomes like an arbitrary thing. Like, why should you care? So it's more like you're entering dollar amounts at a market cap level, and then that becomes the guiding decision for how you want to invest, right? And so that was really one of the core reasons why we did that, and we'll keep beating that drum. So one of the things that we're going to launch, like I talked about, we're launching these kind of compare features. And one of the things we're going to launch is basically the ability to compare market cap similarly across a bunch of companies, because we think it's so much more important that people get into the understanding of really relative market cap between companies. Because I 100% agree, like the first thing you see typically is just like the stock price. But for most people, that's not really the main thing that they would necessarily think about, especially if you're a long-term investor.
I got to add one more moonshot here since we're doing it, which is hypercharts. Like, to me, that's what I tell my sister. It's like Etsy, look it up on Public. Now let's go to hypercharts and start doing the fundamental analysis. You know, that Carta Public conglomerate that's worth 10 bill issues 5 mil of stocks to incentivize us, gets the hypercharts acqui-hire. Bam. We're no, I'm joking. But I think that is such a, like, the market cap to me is just scratching the surface of how many people who are buying Lucid stock don't know the financials, don't know how much money they're burning. It's, to me, that's just, it's embarrassing. And I kind of get like a little bit on one in my live streams about it, but I'm like, dude, like, you're literally just gambling and trading. Like, you're not investing. It's kind of embarrassing. So I love, like, and that's what's so cool about when you think about what Public is and how a company can have a social mission. And it's like, yeah, Public's really educating people. This is the class that every high school and college and middle school and elementary school is missing in America, is how to invest in the stock market and figure out what finance is and participate in the miracle that is capitalism, instead of just letting it crush you, you know. And it's getting so to me, it's amazing. And the power that you have to be able to educate people with features like that market cap compare is just incredible. And so that's what really gets me pumped about Public, is there's a lot of power and responsibility that comes with being in your place of having 1 million young investors. I think you just hit on your app, like, but that's also an incredible chance to move the needle. And instead of just giving them $10 and saying play with margin, you're going to give them tools and data and information to understand how far markets really work and financial markets really work, and, you know, what companies are actually worth, and like real homework, SEC filings, 100%. Like, yeah. So I'm just 100%. Such a big fan of that. And
100%, dude. And like another thing is like, truth be told, I know that it can be very thrilling to dive into a momentum trade without knowing any of the fundamentals, or just like, you know, looking at any of the data, right? But I personally at least think that it's much more satisfying and fulfilling to really do a little bit of the homework and do a little bit of the research, have dialogue with a bunch of people, right? I'm having it with you, you can have it on a app, wherever, and then like inform yourself and then make a decision. And then when you see it play out, frankly, whether you're right or wrong, which is also a matter of time, by the way, it's still satisfying, because like either you learn a lot, or either you come to the conclusion you've made a good decision, you know, the investment kind of goes up, and that, like, making a decision for yourself versus just diving into a momentum trade, a longer term vision, and like following that, that is much more satisfying and fulfilling. At least I personally think so. And I think a lot of people in our community feel the same way.
And like being a part of it, like going to the Tesla shareholder meeting every year and earning your spot to be at Battery Day and watch Elon Musk talk and like get the first ride in the autonomous Tesla car. Like it can be really fun to be an investor. And
because you feel like you're owning a part of the company, which you are, right? So you're acting like an owner versus just being a trader. And I think those are two wildly different things. And to my earlier point, the stock market was not designed for trading. It was designed for owning. And that's kind of where that's the direction we're trying to take things back to.
Epic. And I know we're running out of time here, but I have one idea that I wanted to ping you, or actually it's called the close homie feature for Public, because I would want a push note, and this is going to crush it with your engagement too. It's going to be great for the business. I want to get pinged when one of my close homies makes a trade. Like I want a push notification. Like, and I know I have like a dozen homies who want it for me, and I want to get all of them on Public, and I want to, so I can like press a little button next to their profile. It says like close homie, and I could even make Shaq a close homie if I want, because he's like, but those are essentially these people where I can't think of many apps where I want my phone to tell me something. Very rarely. I'm the person who puts my phone on do not disturb, don't hit me up, never disrupt what I'm doing. But like financial markets, it's happening now. I want to know ASAP. I want to get that information, and I want to cut through the BS because, you know, I am following a lot of people on Public, but there's a few of like my little sister. I want to know when she buys Etsy. I want to know when my boy Jay Filchi gets FOMO'd into finally buying more Tesla. Like so anyway, that's a kind of cool feature that I think would drive up engagement too.
Dude, 100%. Give us a little bit more time. Maybe next time we chat, there's a bunch of things on the app that we
last question. Public is democratizing markets. You're crushing it. You're opening up access. The one thing you haven't opened up access to yet, but I know I want more access to, and I bet all my subscribers do too, is the equity cap table of Public, the company. So you guys are worth like $1 billion. Are you going to IPO? Are you going to list on Carta X, the third option? Will you give your customers an option to be an early investor in your platform? I mean, this has got to be something that keeps you up at night, or I know you're scheming on. So I'm just so curious of what can we get out of you as a public comment on this?
I mean, look, to be perfectly honest with you, I haven't spent too much time on that because I think we just hired our CFO, Shruti, who probably will spend more time on that, because my head is always in product. It's in engineering. It's in the community. So that's not kind of the thing that I wake up and think about every morning. We are a Carta customer. I haven't actually spent enough time looking at Carta X. I've read the blog posts and whatnot, but I haven't really chatted to anyone there yet. But I'm incredibly fascinated by that movement. I definitely think that's where the world is going. We've actually for a long time had this thesis that the line between being a private and a public company is becoming increasingly blurry.
Oh yeah.
And as a result of that, the journey to becoming a public company starts, 25 to 50% earlier than it used to, right? It used to be a complete binary, right? Uber, great example, right? You're private, boom, you're public. But then the upside on that has not been the upside that you saw from like an Amazon or an Apple IPO or things of that nature. And I think, again, it's coming back to that. SPACs is kind of one way that's happening, of course, right? And SPACs quite literally are a way that the journey of the public company starts kind of earlier. And we're doing some work there that I can't wait to unveil, because really the way we think about SPACs is they're kind of a different asset class. And so there's no reason that it should just necessarily follow the same kind of form and function that other public equities kind of have. And so that's true for public as well, right? And so maybe I can kind of leave it there, and it's enough of a teaser, but hopefully you feel like you got something.
Oh my God. I'm like, wow, you got that politician level answer there. Amazing work. Well, seriously, thank you so much for the time, Jannick. We're going to have to catch up again on the channel. I love Public as a customer. People can follow me at Hyperchange is my Public. I'll put that info there. But I think this is just a fintech startup to watch, changing the world, disrupting this industry, but doing so in a really thoughtful, sort of socially conscious, mission-driven way that I think a lot more people should be taking note on. And I just give you huge props, because I've seen you start from the bottom, Matador, to all the way where you are now. Super inspiring. So huge congrats, and really appreciate the time.
Yeah, thanks, man. It's great to see you again.
Peace.
Cool. Peace, brother.